Hey guys, it's Chris Mincola with the Mincola Group over at West USA Realty, and I'm doing our housing weekly market update. I am going to go ahead and share my screen here with you and jump right in. And we got some really interesting stuff going on this week. So, these are some of the headlines out there. Sellers are pulling homes off the market as fast paced since 2020. I kind of laugh at these headlines, and I'll tell you why in a minute. We'll clean this up um, as we go along. Okay. The CPI inflation came up. The rate of inflation is certainly high, 4.2%. If you strip away and get into core CPI, it accelerated 0.2% for the month and 2.9% from a year ago. While the annual rate was in line with the forecast, the monthly gain was below the 0.3% estimate, so that's good. So obviously what's driving this is the Iran conflict because we're tied in with the global markets. We're the largest exporter of oil now. We found out this week that President Trump has been taking the Iranians' oil, so we'll get caught up with that here soon. And then we're getting a good portion from Venezuela, so that's been keeping things going, along with strategic supply. But obviously, this whole thing has an impact until it's over and really over on the market. And even after that, it's going to take a little bit, 2, 3, 4 months probably at least to really see the rate of inflation where it really is. Trueflation had it this week at 1.8%, for the actual underlying. Not a, This is considered a supply shock, a global supply shock. So what Kevin Warsh has been talking about, we'll see if it gets implemented, is a different way of reading this stuff because true inflation, where the rate of inflation is going up or down, is too many dollars chasing too few goods. This is more of a supply shock to the global economy for energy, which of course deals with transporting of anything, right? Uh, oil transporting of anything. Your food's going to cost more. Fertilizer for diesel fuel. Um, Building supplies, all that stuff's going to cost more. Okay. So again, we've been saying this over and over, but once this thing is over, we'll see it come down. We'll see the oil prices come down, 10-year treasury come down, all that. And then of course the mortgage rates. Um, we'll see if those other supply shock metrics get put into place along with some other metrics that I think you're going to see some big changes at the Fed coming. We talked about this last week. Housing inventory just turned negative year over year, meaning new inventory coming online is has gone down. Okay, since the Memorial Day weekend, and when we look at the national numbers, it's pretty interesting. So we want to look at national single family inventory. Okay, now if we strip out these other years, we can kind of see this a little bit better. Okay, we go into last year, year over year. See how we're running right into last year. So it's gone down a little bit. All right. And then we can see the other years were actually above. And of course, the new listings coming online, as opposed to last year. What do you notice? It's pretty close, right? It's pretty close. Why is that? Because inventory is seasonal every year, and every year we hear these headlines. Okay. It's just like foreclosures are going up. Yeah, after COVID, they went up percentage wise, and they went up from zero because there was a moratorium on foreclosures. So you've got to really dig into not just percentages but the actual numbers. You got to look at the year over year. You got to look at the seasonal adjustments and the seasonal cyclical tail and what happens every year. Okay, although there may be a slight difference from year to year, some years are definitely better than others, but we can see it slumps off towards the end of the year. No great surprise there on new listings. Okay, nationally, that's just where we are. So year over year, we're actually a little bit above where we were. So week to week, we've gone up a little bit, but it turned negative the last 2 weeks, and now it's gone up just a hair. But on top of that, we have this delisting thing that people are talking about. And here's just a few notes I wanted to share with you that I put together just from some different articles just to save you the time. Nationally, sellers are adjusting expectation as listing prices posted their largest decline in 9 years. Listing prices, not sale prices, listing prices. And you've got a lot of aspirational prices. A lot of people feel like we're still in 2021. There's a lot of that. Not everybody, but there's a lot of that out there. More homeowners are pulling listings off the market when they can't get their desired price, aspirational pricing. Phoenix remains more resilient, but sellers are increasingly offering concessions and facing buyer pushback. Affordability continues to be a major challenge. Dave Ramsey, you can love him, you can hate him, highlighting that high home prices, high mortgage rates, high taxes, high insurance, and consumer debt are keeping many buyers sidelined. Okay, no, duh, we knew that. Meanwhile, Open Door is expanding again. Investor activity remains steady. They're like one of those iBuyers out there. They were buying things left and right. It seemed like their signs were up everywhere when we had the COVID boom on real estate. Uh, Phoenix inventory has begun to decline slightly, and mortgage rates are hovering around 6.67%. Again, that's nationally. You can get lower rates through a mortgage broker. We have a great one. I have to put that in there every time. I'll show you the rate sheet here in a minute. Phoenix remains a buyer's market overall, though conditions vary significantly by city. As far as the national, existing home sales continue showing modest year-over-year growth despite elevated mortgage rates. Although we have lower mortgage rates than we have the last 2 or 3 years, obviously, and mortgage rates are hovering around six. I'm sorry. First time buyers made up 35% of purchases, one of the strongest shares in years since 2020. I've got a little graphic for you on that. Let me pull that up for you. Okay. First time buyers made up 35% of existing home sales in May, up from 30% year over year, highest share since 2020. So that's good news. All right. So um, this uh, helped by slightly improved affordability with salaries going up, okay, outpacing some of the inflation metrics, although this current reading was pretty high for sure, and increased mortgage demand. Inventory is rising while sales are also increasing, and healthy combination that helps moderate price growth. Okay, so we still have enough of a backdrop from the inventory that we've received over the last year and a half, because at one point we were up 32% in listings, okay, and in fresh new inventory. So some of that's dropped off a little bit. Today's market is far healthier than the pre-pandemic market. I'm sorry, than the pandemic market, and that mortgage rates near 6% remain favorable given current economic conditions. Mortgage spreads between the 10-year treasury and the 30-year mortgage rate, that's the spread. Normally it's 1.6 to 1.8. Right now, we'll take a look at it in a minute. We're closer to 2, but they continue to improve overall, helping keeping rates lower than they otherwise would be, while housing demand remains surprisingly resilient. Okay, overall. So we're kind of in a normal balanced market in a lot of ways. But if it wasn't for those mortgage spreads right now, where they are compared to, year and a half, 2 years ago, we would see mortgage rates right now well over 7%. Okay. Um, so that's the bottom line. Now, when we look at the mortgage spread, let's take a look at that. Oh, by the way, mortgage application data. If we look at, let me get rid of these. If we look at it year over year, it's definitely up a hair, but kind of running into last year with a slight uptick. Okay. So if it wasn't for the whole Iran supply shock thing, totally different story, guys. Um, the other thing I wanted to point out was your pending home sales nationally. Those year over year are up. Although you've got a little bit of a slope happening right now, they are up year over year. Okay. So that's good news. The mortgage spread year over year. Let's take a look at the last couple of years. So here we are right here. We want this to be lower. That's good. So the spread right now is at 1.97. Again, we usually like to be between 1.6 to 1.8. The last couple of years, the same time, we were at, 2 or 2.5. So big difference there on the mortgage spreads. It's why we have lower rates. That 200 billion in mortgage-backed treasuries that Fannie and Freddie put in definitely made a big difference. Okay. Um, I don't know why that's in there. Let me get rid of that. Okay. So when we look at the 10-year treasury today, it's at 4.48. So our mortgage rate is at 6.58. So that should be closer to four. Looking at this number should be more like, 6.3, 6.2, but not bad. Mortgage rates went down a hair today. Um, Looking at that, let me just show you really quick here. Through our mortgage broker right now, okay, these are fixed rates, 620 credit score or higher. VA, you can actually get credit scores as low as 500. A lot of people don't know that. Of course, with VA, I've got a separate VA video that we post on our socials. I'll email it out to everybody on our subscriber list. But right now, our conventional is at 5.8 with our mortgage broker compared to that 6.6. FHA 5.3, VA 5.3, and Jumbo 5.8. So really good. What you always want to look for too, guys, is the APR. That'll tell you the tail on what you're being charged for your fee structure with the lender. Okay. And a lot of them on top of that will also include things like some other overlays. They'll throw in origination fees and processing and underwriting fees. Our mortgage broker does not do that. So you're going to save literally thousands of dollars going through our mortgage broker. So unless you like giving money away, I'd suggest at least having a conversation. Hey, compare it. If you come out better somewhere, wonderful. Okay. That's great. Good for you. He also has arm rates, conventional, which would be a little bit lower. The 5.7 on the conventional, 5.125 on the FHA, especially lower on the FHA and VA, and the 5.125 on VA right now. So something to keep in mind. Just have a conversation. That's all I'm saying. Hey, before we get into the Cromford report, let's take a look at these numbers here so we can make sense of what's going on in the greater Phoenix area market. 79 days closed on market as of June 8th. We are at a 4-month supply. That's important because that tells us, basically anything under 4 is going to be a seller's market. Right now, we're in a balanced market. Feels that way. I told you, with our latest data that we have, we are up about 3.4% on the average sales price in the Phoenix area. Our median is flat, 0.0. Okay. Absorption rate is at 24.59. So that's how fast properties are being absorbed in the market, going, under contract, closing out. So we'd like to see that number a little bit higher. But right now we're at an average list price of 766,000, average sales price of 644,000. The average list to sales price ratio, there's all this buzz out there, at least for us in the Phoenix area, about price reductions. Well, normally we like to see this list to sales price ratio, rule of thumb, 97.8. We are at, well, actually, if we look at the rule of thumb right here, Um, for the where are we here? List the sales price rate. Yeah, 97.8 for our list sales price retention. So right now we've got a little bit of a different number there. So sellers are giving up just a tad more than that, 0.4% more. Okay. So sellers are giving up basically about 2.6%. Okay. On their list price right now. Nothing crazy for the Phoenix area. This is the whole greater Phoenix area, guys. Active properties are down a little bit, almost a 0.5% at 0.4%. Pending's down the same, 0.4%. Okay. Um, keep in mind though, our peak season, especially for Arizona, is spring. Okay. Yeah, early summer, we're still hanging in there, but really the most listings will go on the market. The most buyers will be in the market during April, May. Okay. The majority. And then from there, it kind of levels off a little bit. And then in the fall starts coming down. Okay. Especially when school's back in. So closed units is actually up from the tail end of the spring. It's 6.24, I'm sorry, 6.2%. That, of course, makes sense because there's always a 30 to 45 day lag typically on most escrow periods. And then you can see all of our price ranges here. 66.45% is at 600,000 or less. 600,000 and above is 19.54%. And a million plus 14% of the total market share. When we look at the rule of thumb over here on the left column for new listings, we would like to see about 2,400 a week. This week we were at this past week we were at 1,965 properties. Okay, that's up from the previous week, and it's up a little bit year over year. Nothing crazy, but it's up. It's up 300 from the previous week. So people are still listing their properties. It's just we're having a drop off on total inventory a little bit. Nothing crazy. All right. Um, so, and when we look at that number at 25,000, that's a pretty good number. Okay. Of total inventory. And again, that's everything. Okay. When we look at, we talked about the sales price ratio there. Really quick on the distressed short sale up 3%, lender owned REO up 6.7%. But again, you don't look at the percentages, you look at the numbers of the overall total, nothing, pretty much nothing. That's kind of a normal, those are pretty normal numbers there. Okay. On the distressed. So nothing crazy happening there on any of that. Um, so it is a little elevated, but nothing super crazy. Okay. Um, all right. So moving on from this, getting into the Cromford report. Cromford market index 90 to 110 is a balanced range, 100 being totally balanced. Supply and demand, if they're both at 100 or the same number, you have a balanced market. So right now you've got 5 points over 100. So we got a little bit more overall supply, not that new fresh supply, but overall supply. Um, kind of that holdover from the spring market and the new inventory that's come on. And then the demand is below 100 by about 14 points. So our demand is still a little weak, but I think we'll see as rates drop, we may see a little bit. We usually see like an end of the year surge anyway. It's kind of normal on purchases. And then, of course, after, once we get into the holidays, everything just pretty much drops off. I mean, homes sell every day, but it drops off quite a bit. Okay. That's just normal cycle in the market. Okay. Um, looking at the contract ratios of what's actually active, let's just get ourselves into Maricopa County here. And we are at 36.6. Anything over 30 is considered warm. So this is more of what's happening right now, of what's actually active to what's actually under contract Contract ratio is 36.6, which puts us in a barely into a warm range. Okay. And if we look at the heat map, let me click this on here. We can see there aren't very many hot areas like this here up in North Scottsdale, down here in Chandler. Um, there's another hot spot over here in South Phoenix. Another one over here in West Phoenix, and up here in Northwest Phoenix, we've got a couple of spots. Everything else is pretty warm, and then these areas in here have been very cold for a long time. Okay, a very long time. And you got a cold area over here in Glendale at 85307. Okay, so if you're in one of those areas, you can go by this to expect, a little bit about what's going on in your market. So it's not a huge surprise once you list your home, or if you're going out there to buy something, okay, in this area, I can expect a little bit more from, what it is that we're doing. On the purchase side, we can maybe get a little bit more concessions. We can maybe look at what we can get in lowered costs right now. I would totally recommend going for the concessions over the price reductions, unless you're paying all cash, because you want the lower rate, right? So big deal there. Let me just show you this really quick before we get gone here. And that is, we've got an open house over here in Litchfield Park the next couple of days. We may have some of these during the week too coming up. But Saturday from 10 to 3 and Sunday from 1 to 3, we're going to be over here on Turney Ave, 20083 West Turney Ave in Litchfield Park. It's a 4-bed, 2-bath, 2270 square foot, 6,000 square foot lot. Take a look at that. Man, look at that kitchen. Isn't that beautiful? Light and bright and airy. You got tiled shower, and it's just a beautiful property. We're looking forward to hosting that open house. So if you have anybody who's looking to Litchfield Park, let me know. We'll definitely be able to turn them on to that or some other properties in the area. Also, right now, if you're thinking about listing your property for sale, let us know. Even if it's 3, 6 year out, we'd love to be able to come by, take a look, tell you what you may be able to do to get your home ready for sale. Okay. So that it's presenting well when you're ready to do that. And we talk about pricing. We'll talk about what you're going to walk away with, all the costs associated with that for closing costs, professional fees, all that kind of stuff, and what you'd be walking away with. So we can even show you how many showings there are in that area, what your contract ratios are for that area. If you're in a hot area, warm, cold, whatever it is. Some of this stuff too is hyper local to the community. And if you've got certain features on your house, that's obviously going to go a long way, especially again, if you price the home correctly. So, um, buyers, it's a great time to be a home buyer right now. If you can afford it, go over that budget with your significant other, if you have one, and your mortgage broker. We've got a great one, Andrew Fisher over at Semperfi Home Loans. And he and I just did a video on VA loans too, for anybody who's out there who's VA. Some secrets to VA loans, some things that even a lot of lenders just don't catch or know about when they are, getting you pre-approved for a home loan. A lot of lenders will offer VA, but they're not specialists in VA. Ours is, and he just an overall knows his stuff on conventional FHA and VA type loans. So if you guys have any questions at all, feel free to reach out. We'd love to be able to set up a consultation with you so we could go through and help guide you. Totally no judgment on what you're doing, when you're doing it, all those sorts of things. We just want to provide you with really good, solid information and guidance so you have all the facts and know what to expect. Thank you guys. Also, one other thing before I forget, I almost forgot this. I have what's called, I'm going to be sending this out in the weekly email. I also posted a video about this on our socials. It's called the Arizona Buyer Advisory Guide. And let me see if actually, let me get my share screen back up here for you. Okay. Where was that? I just had it and now it's gone. There it is. Okay. Arizona Buyer Advisory Guide. And this is updated every few months. So this is as of February 2026. The reason why this is important, we've got a buyer guide, buyer consultation we'll go through with you and all that. But this is a little different. This is put out by the AAR, the Arizona Association of Realtors. It's a buyer advisory guide for everything you'd want to know in Phoenix. I know a lot of people today, they're Googling stuff, they're doing Chat GPT or Claude or whatever, AI. But you got to keep in mind, everything needs to be Arizona specific. And you want the official live links, not somebody's opinion on some blog page or whatever. You want the official information, and this document gives you all that, the official live links, everything you wanted to know about purchase contract and all the documents you'll be looking at, disclosures that you're going to get from the seller to the buyer. If there's an HOA, all those disclosures, what you need to know about termites in Arizona, other pests, what you need to know about your inspection, your appraisal, everything about crime stats in the particular area you may be looking in. This document pretty much covers everything you could want to know, your title report, all that stuff, loan documents, home warranty, anything you could think of, this document has it, and it has the official information. And again, live links to take you where you want to be. Whether it be, flood zones, flood insurance, your roof, swimming pools and spas, all this stuff, septics, systems, water treatment, water treatment facilities, all that stuff is going to be in this document. So it's another way we provide value for our clients as realtors in Arizona. So again, if you have questions at all, feel free to reach out. We'll be sending it out today to everybody. It's posted on our Facebook and our YouTube page in a video there. If you have any questions at all, let us know. Thanks. We'll see you guys next time. Have a great weekend.